Hi, this is PR Sundar. Last time I came out with a video how to predict the market range using the India VIX. And because people want to sell option or buy option, so they need to know where the market is likely to go. It can go up to this or it can go down up to this. So they need some kind of a guideline. So last time the video I came out by predicting the market range using the India VIX. And some people told me, sir, the working is very complicated. The monthly range is India VIX divided by square root of 12. One need to take a calculator and this and that. So is there a very simple strategy? Yes, there is a very simple strategy using the option chain. So this topic is predicting the market range using the option chain. Now first let us look at the option chain. I'm going to use the new website because after this month, so the old website will not work. In the new website, you just type NIFTY. You can see NIFTY derivatives. And the one problem with the new website is that it's a bit slow. I think the technology they are using must be something different. And here you can see the option chain. You click on the option chain. You will get the option chain. And here, this is the 3rd September. Click here. You will choose the 24th September. So that is a monthly option. So we want to predict how much the market can go up or how much the market can go in the September expiry. So what normally I do, when the August expiry is over, I just wait for one day. That's on Friday, the first trading session. So normally the first trading session decides the direction of the market. So I think yesterday the market went up and the Nifty actually closed at 11,647. So that means roughly it is 11,650. So the nearest strike. Now let us look at the 11,650 call option price. 11,650 call option price is trading around 220 rupees and put option is trading around 190 rupees. So 220 plus 190, the total works out to be around 410 rupees. So what I do, I look at the money option prices, both call option and put option. The total premium is 410 rupees. So in the month of September, the markets are likely to trade in a range of 11,650 minus 410 or plus 410. So that works out to be 11,240 rupees on the lower side. On the higher side is 12,060. So let us round it off. So if you round it off, you can assume that market will be trading between 11,200 and 12,100. But is this a golden rule? No. This is just only a guideline. In my opinion, there is a 65% probability that markets will be trading within this range, 11,200 to 12,100. But this is again probability only, it is not certainty. So I have given my view for the month of September, 11,200 to 12,100, and let us see what happens this month, and I will continue to update until the end of this month. So Using the India weeks, the formula is difficult. You need to have a calculator and you need a little bit of calculation. But this way of predicting is very simple. And that is because at the money option seller, somebody who is doing a short straddle, and most of the time they will be making some profit. As I said, it's only 65% of the time they will be making profit, but the remaining 35% of the time they will be doing some adjustment trade. So that is irrelevant for us now. So let me tell you once again, the market range for the month of September is from 11,200 to 12,100. So let us see what happens. Thank you for watching.